Donald Trump slammed a 50% tariff on Canadian aluminum, thinking he was cornering a smaller neighbor into submission. Instead, he handed Canada one of the best trade years it has had in over a decade. While American car makers and beer companies are drowning in higher costs, Canadian aluminum producers are shipping record volumes to Europe, cashing premium prices, and posting numbers Ottawa hasn't seen since the aftermath of Russia's invasion of Ukraine sent oil prices soaring. Just this month, Statistics Canada confirmed the country's trade surplus hit its highest level in 4 years. Not despite the tariffs, because of how badly they backfired. This isn't spin, this isn't Canadian propaganda, this is Bloomberg, Reuters, and Canada's own government trade data all telling the exact same story. An American president tried to punish Canada economically, and Canada responded by quietly building an entirely new, more profitable trade relationship with Europe, 1 ton of aluminum at a time. By the end of this video, you'll understand exactly why economists are now calling this tariff one of the clearest examples of protectionism blowing up in its own creator's face, and why the country that was supposed to get hurt is the one currently sitting on record numbers. So here's exactly what we're covering. We'll start with the freshest numbers just released, Canada's trade surplus hitting a 4-year high this July, and break down precisely which sectors drove that number. Then we'll dig into the aluminum specifics, the Statistics Canada figures showing exports jumping over 50% in a single month, and exactly which European countries are buying it all up. We'll look at the wild geopolitical twist involving the war in the Middle East that accidentally supercharged Canada's pivot to Europe. Then we'll break down the actual price gap, what Americans are now paying per ton compared to Europeans, and who's really footing that bill. We'll cover the bigger structural shift happening across Canada's entire export economy, not just aluminum. And finally, we'll talk about why this shift looks less like a temporary blip and more like a permanent divorce from economic dependence on the United States. Let's get into it. Let's start with the freshest number on the board. On July 7th of this year, Statistics Canada confirmed the country's merchandise trade surplus widened to 4.2 billion Canadian dollars, up from 3.4 billion in April. That's the 3rd consecutive month of surplus, and it's the largest Canada has posted since May of 2022, back when oil prices were spiking because of Russia's invasion of Ukraine. Bloomberg's own reporting made the driver of this explicit. Canada's energy, metals, and mineral sectors are helping fill global supply gaps left by disruptions in the Strait of Hormuz, essentially stepping into a vacuum created by instability thousands of miles away and turning it into hard currency at home. This is a country that Washington assumed would be begging for a deal by now. Instead, Canada is posting its best trade numbers in 4 years, with tariffed sectors like aluminum leading the charge rather than dragging it down. Now, let's get into the aluminum specifics, because this is where the tariff backfire becomes impossible to ignore. Statistics. Canada reported that in May, exports of unwrought aluminum and aluminum alloys spiked by more than 50% in a single month, contributing to an overall 16% jump in the country's minerals and metals exports. The agency was explicit about where that growth came from, mainly higher exports to the Netherlands, Italy, and Greece. Canada's own government trade office confirmed the patterns goes even deeper. Goods exports to the European Union grew 23.5% in 2025 alone, the largest increase on record, with aluminum specifically flagged as a clear case of trade diversion. Tariffs on aluminum pushed exports away from the United States and straight into an expanding European market. Trade data monitor figures show just how dramatic the shift has been. Canadian aluminum's share of U.S. imports fell from 75% in early 2024 to 63% last year, down to just 54% in the first quarter of this year. Meanwhile, exports to the EU went from near zero at the start of last year to as much as 40% of monthly totals by early this year. That's not a minor adjustment. That's Canada actively rewiring where its most valuable metal exports go, in real time, in direct response to a hostile American tariff. And there's a geopolitical twist that made this pivot even more profitable than anyone expected. The war between Iran, Israel, and the United States disrupted aluminum supply out of the Middle East, a region that normally supplies around 21% of Europe's primary and alloyed aluminum. That disruption landed on top of the EU already phasing out Russian aluminum and losing a major smelter in Mozambique. Bank of America's own commodities analysts now estimate Europe faces a 5.6 million ton aluminum deficit this year, compared to a global shortfall of 2.2 million tons and a much smaller U.S. deficit of 3.8 million tons. In plain terms, Europe is short on aluminum for reasons that have nothing to do with Canada. And Canada happened to be sitting right there with exactly the clean, high-quality metal Europe desperately needed, at the exact moment Trump's tariffs made American buyers less attractive to sell to anyway. So who's actually paying for this mess? American manufacturers, quite literally. Industry pricing data shows American aluminum buyers paying somewhere around $6,200 a ton, while European buyers are getting the same quality metal for roughly $4,300 a ton. Jean Simard, president of the Aluminium Association of Canada, has explained the mechanics plainly. Once you strip out the portion of the U.S. price that's essentially just tariff revenue flowing straight to the American treasury, the real value Canadian producers get from European buyers is just as strong, often stronger, without the political risk of depending on one increasingly unpredictable neighbor. So Trump's 50% wall, designed to force Canada to keep selling cheap into a captive American market, instead pushed Canadian producers toward buyers who are paying more and complaining less. Zoom out even further, and this isn't just an aluminum story. It's the story of Canada restructuring its entire economic relationship with the United States. Canada's own chief economist reported that the value of exports to countries other than the U.S. surged 11% last year, while exports to the United States actually fell 3.7%. That pushed the non-U.S. share of Canadian exports to its highest level in over 4 decades, sitting at nearly a third of all Canadian exports. Crude oil exports to the Netherlands, Germany, Italy, and Spain climbed sharply too, alongside record gold exports as global uncertainty pushed money towards safe assets. This is a country that has spent the last year methodically proving to itself that it doesn't need the United States nearly as much as Washington assumed. Of course, none of this has been entirely painless on the Canadian side either. Thousands of jobs in Canada's aluminum sector still depend heavily on American demand, and some producers have had real short-term strain adjusting to new markets, new freight costs, and new currency exposure across the Atlantic. Analysts have also flagged that these European premiums won't necessarily stay this high forever, as new supply eventually arrives and buyers gain more negotiating leverage. But even with those honest caveats on the table, the core story hasn't changed. A tariff built to punish Canada has instead handed the country record trade surpluses, a historic pivot toward Europe, and a shrinking dependence on the very market that tried to squeeze it. So that's the full picture, going into the back half of this year. An American president tried to use tariffs as a weapon and ended up accelerating exactly the kind of independence he was trying to prevent, while his own manufacturers and consumers pick up the tab. There's also a quieter lesson in here for anyone still assuming tariffs simply hurt whoever they're pointed at. The Canadian producers who pivoted fastest didn't do it out of patriotism. They did it because the math stopped making sense any other way. And that's exactly why this shift is proving so durable. Once European ports, contracts, and buyer relationships are locked in, they don't just snap back the moment a politician changes his tone on trade. That's the part Washington seems to keep underestimating. Supply chains don't reroute for a news cycle. They reroute for years once the incentive is strong enough. And right now, every signal, from the Statistics Canada's numbers to the Bank of America deficit projections, says that incentive isn't going away anytime soon. If you found this breakdown useful, hit like and subscribe and tell me in the comments, do you think Washington ever reverses this tariff? Or is Canada's pivot to Europe already too far along to undo?